What is going on, investors? Back again. Exciting day with earnings, and Starbux was one of the companies that reported after the bell. Ticker symbol SBUX. Full disclosure, I own some shares of Starbucks, but I do not drink coffee, so that's an interesting one. We saw this stock react negatively during the regular trade, but it actually has ticked up, and it's almost like flat on the day if you include the regular trade and the post-market. So what we'll do is we'll take a look at the high-level stuff here. We'll jump into the chart of Starbucks and see if there's a range here where we can buy shares of this stock. Then we'll take a look at the financials. There's a couple things in here that are actually kind of interesting, so we'll definitely take a look there. So Starbucks, $87 billion market cap. This stock was a lot higher pre-virus and things like that. Like a lot of stocks, has recovered fairly nicely. When we get over the chart, we'll take a look at that. PE ratio 26. You're rarely going to get this stock on sale. You're rarely going to get this, back in March, you could get it for $58 a share. It's recovered a little bit, but it's traded sideways since then. It does pay a dividend here, about 2%, which is actually not bad. That's $1.64 per share. Now, let's jump into the financials, and then we'll jump back to the chart here, see if we can pick some levels where maybe we can pick this stock up if you wanted to happen to go long Starbucks. Now, some interesting stuff here. We obviously see comparable sales growth here back last year when everything was all good. They were getting about 7% comp here. This is in America. I'll show you the rest of the world in a moment, but we can see boom, down 41%. I've got a Starbucks, around the block from me, and it's kind of been open and closed, open and closed. It doesn't have a drive-through or anything like that. So I can see how they've struggled here, and obviously 41% decline in comparable sales growth is an absolute disaster. If there was no good reason for this stock would be way down. I mean, just tremendously down. Now, what's interesting, we see change in transactions here too, lower, but what's positive, I think, for the company is this change in ticket. So you see here, consumers spent about 4% more back in the previous period here. And now, while the traffic and the sales growth is way down, people are spending more. So it'll be interesting to me when things get back to open and everything's back to open. Will these consumers keep spending like that? Like, it's interesting. Like, I don't know what's necessarily driving it. Maybe they're buying bigger coffees than they normally would, or they're buying more of it, or they're buying the more expensive drinks, or they're adding a pastry or something to the order. I don't know what's necessarily driving this. I just think it's kind of interesting. We see store count ticked up a little bit. Revenues are down. We'll take a look at the deeper financials here in a minute, and we'll look at all that. Now, I wanted to slide down here, international segment. We saw the same thing. We saw same-store sales growth decline, change in transaction. But look, the same thing's going on in the international market. We were up 3% in the previous period, but boom, 13% a change in ticket. So people are definitely either buying larger sizes, or they're just buying more of what Starbucks has. And that's a really, really interesting trend. And if that continues, I think that'll be a very, very positive thing once things get a little bit more back to normal. Now, here we go, taking a look at the statements of earnings. We've got net revenues here at the top. We've got company-owned stores, and then they also license almost like a franchise, I guess, a little bit as well. We can see just boom, these sales have just fallen off an absolute cliff. We went from 5.5 billion all the way down to 3.4. And, actually, these numbers are relatively small in comparison to the company-owned stores. So this is a company that has exposure all to their own stores, and that might be a good thing. They're able to control this and maybe control the cost there as well. We've got net revenues we see here slid off by 38%. That's an absolute disaster, but obviously there's a good reason for it, and the sooner things start to turn around, the sooner Starbucks is able to get back to normal. Now, the thing you really want to pay attention to is how well Starbucks controlled cost and controlled profitability. So we've got all our costs here. We actually see a lot of the costs driving down. We saw this one tick up quite a bit, this other operating expenses. My guess is this has to do with safety standards, training, and things like that. But it's such a small number in comparison to revenue, so it's not that big of a deal. But we see all these other costs go down. That's exactly what you want to see, because when your revenues go down by this much and your operating revenue goes down by a lot, that much, it is not good. Now we come down here to operating income. In the previous period, it was 1.2 billion, and then boom, they lost $703 million. That is 162% change. That's an absolute disaster, but it could be a heck of a lot worse. Now let's come down to net income here. We see it here. We got the net, they call it net earnings. It was 1.3 billion in the previous period, and then here was at $678 million loss. That's a change of about 150%. Now, again, this is a disaster quarter, but it appears the way the stock is trading here in the after hours that it wasn't as big a disaster as investors might have thought. Now, this is giving us a little bit wider time frame. We've got 3 quarters here, or 9 months essentially. And we see revenues are down by about 13%. Total net revenues are down by about 12.4%. Operating income is still positive for the 9 months, but it is down 66% year over year. So that's not great, but it is not bad. Obviously, you want this to improve as quickly as possible because we see here they've earned 45 cents per share in profits, and they pay out $1.64 in shares in terms of just for a dividend. So you're obviously going to want to see that turn around as quickly as possible. Now, when a company loses this kind of money and nobody is sure how long Starbucks is going to be in this limbo of like closing stores, opening stores, keeping the dining rooms closed, that kind of thing. Nobody's really sure how long this could last. It could last a really long time. How well capitalized is Starbucks? Very well capitalized, at least from what I see here. They had 2.7 billion in cash in the previous period. Now they've got, call it almost $4 billion. It looks like they've been handling inventory relatively well despite the lower sales and things like that. So that's something that you definitely want to see. Total assets ticked up big time, over close to $10 billion. That's interesting. Most of it appears to be coming from this operating lease here. So it looks like they might have done some leasing during the quarter. In terms of liabilities, this company does have some long-term debt here, and we see it ticked up by about, call it $3.5 billion. They have some short-term debt due here as well of about $1 billion. So again, they have $4 billion. In terms of current liabilities, they have about this $8 billion. So that's not, I wouldn't say that's super safe, but it's not something that I would particularly be alarmed with, especially the faster things come back around. Starbucks should not have to worry about these type of things. They could probably always roll this short-term debt and some of these other things into longer-term debt as well. So I wouldn't really be worried about them from a financial perspective. Now, in terms of cash flows, that's really what you want to see here. We see that cash flows by operating activities went down big time. So we were at 3.9 billion and we went all the way down to 107 million. So when this company, it's not like some other companies that we've looked at. When this company struggles, they are going to struggle on the cash flows as well. So Starbucks really does need to have things turn around relatively quickly, because the longer this goes on, the more cash this company is going to be bleeding. We see here cash at the beginning of period, end of period, it actually went down just a little bit. So the longer this goes on, the more, I wouldn't say trouble Starbucks in it, but the more financially engineering that they're going to have to do. They're probably going to have to issue more debt or raise some capital at some point. If you're confident that things come back pretty quickly, Starbucks could be well positioned. So let's jump over to the stock chart really quick. We'll draw just a few lines here. We've got kind of the bottom of a trend here at about 71, although it kind of holds that top mark there. And then we've got kind of we're kind of stuck in maybe the top of the channel is probably somewhere up in here. Like a lot of stocks, this stock is kind of chopping around in this range. I think your upside again in this stock, just in the short term, is probably up into the $80, $82 range. Your downside is probably back down here to 71, call it $72. So it's actually sitting right there in the middle of this range. If you're bullish Starbucks, I wouldn't run out and buy this stock. It It wouldn't be one that I'm running out and buying or adding to. Certainly something I have the opportunity to do. I think I picked up Starbucks shares many years ago down in this $50 range, and I think I might have even added a share or two when it was, you notice that it bounced off this $50 range. To me, that's, I don't think that price is coming back anytime soon. Now, obviously, the longer these things go on, yes, the stock could easily retest this $50 mark, but I don't anticipate that. I actually see it kind of treading sideways in this range. If you want to buy Starbucks shares, I would look for it closer to $71, $72. I probably would avoid it at this $82 level unless you think it's going to break out, because as it approaches this $82 level, if it breaks out here, it could easily trade up into this $88, maybe even $90 range. There's a fairly amount of blue sky. We have a little bit of a gap here. We've got some other gaps that really, this one here too. So there's some room up above this stock. If you're bullish Starbucks, I could see this stock over the next 12 months. If things really progress with the health situation, this stock could run from the $75, $76 range all the way up to, call it $90. I could easily see that happen as well. So there you go. That was Starbux. Hopefully you enjoyed that one. We'll be back again shortly with more videos, more earnings releases, and we'll be doing that all this week. Maybe consider hitting that subscribe button and that like button as well. We'll be back soon. Good luck with your investments.